On May 5th of 2023, the tech company Nvidia had the third largest one-day valuation gain in the history of the stock market. Its valuation increased by $184 billion in a single day. Just to put that into perspective for the average person, that increase in valuation is the equivalent of adding 442,000 average American homes to the company's portfolio. It's also the equivalent of the average annual salary of 3.1 million American workers. Regardless, this increase in valuation was insane and historic, something that the company and the world may never really see again. Until it happened 9 months later when Nvidia had an even bigger single-day gain. They did this by gaining $247 billion in valuation in one single day. And to put that into perspective as well, the most valuable company in the world in 2010 was Exxon Mobil, who had a total valuation of just over $300 billion. Meaning that Nvidia gained almost as much value in a single day recently than the total value of the most valuable company in the world 14 years ago. And by the way, this isn't just happening with Nvidia, it's happening to every large company. Meta, Apple, Amazon, and many others are gaining tens of billions to hundreds of billions of dollars in value in essentially 8-hour periods. And investors are cheering this on. And for a good reason. I mean, if you invest in the stock market, you want a good return on your investment. That's completely fair. But now we have companies like Microsoft that are worth $3 trillion depending on the day. Yet 6 years ago, the most valuable company in the world was worth only $1 trillion. But don't worry, this is a sign of a booming investment field and a booming economy, right? And definitely not a sign of a dying empire. Anyways, the stock market boom is actually not necessarily a cause, but a symptom of a much larger problem in the entire investment economy. You see, there's been a problem that has been growing since the 1990s, and it's that there are less and less companies going public every single year. In fact, in 1996, there were 8,000 American public companies, yet today, that number sits at around 3,700. And the reason for this is twofold. One is that a lot of large companies worth hundreds of millions or billions of dollars do not wish to face any sort of public scrutiny and more regulation than private companies. So a lot of big companies just choose to stay private more often now. In fact, there's a long list of CEOs like, Elon Musk that very much regret taking their companies public. But another reason why there are less public companies today is that there are a lot of smaller billion-dollar companies that get bought out by the litany of trillion-dollar corporations. It seems that almost every day there's some sort of billion-dollar acquisition by a private equity firm that no one has really ever heard of, yet somehow they own hundreds of billions of dollars worth of assets. What I'm trying to say is that initial public offerings on the stock market are falling off a cliff to all-time lows year after year. And so there's less companies to invest in, yet there's more money in the stock market. Meaning that companies' market caps and valuations should theoretically keep soaring well into the future the longer this trend goes on. However, there's also a few other things going on with this investment economy that are a bit worrisome to the larger economy as a whole. You see, when the world stops innovating, or an investment environment becomes very risky, two things tend to happen. One, investors put more of their money into the largest companies in the world because they are too big to fail, they have lots of money in the bank, and sometimes even pay a safe dividend back to the investor. The second thing is that investors put their money into an investment sector that is arguably the oldest investment vehicle in the world, and that is real estate. Let's say you are a large corporation and you have so much money in the bank that you don't know what to do with it. Do you buy up smaller companies to try and make yourself a monopoly? Well, yes, but you still have a little bit of money left over. So do you put that money into research and development, which would hire thousands of new people and be better off for the middle class? No, that's way too risky. You can't spend $1 billion to do that, even if you have hundreds of billions of dollars in an assortment of international banks all over the world. So, who really cares about the middle class? You just put that money in the bank and let it sit. However, you still gotta use some of that money. So, what do? Well, the answer is to safely buy up real estate and become landlords. Recently, the trend of Wall Street and large corporations buying up residential homes has been notable, especially during the pandemic, as these entities capitalized on low interest rates and a surge in demand in housing. In 2022, investment companies accounted for 22% of all American home purchases. In 2021, that number was 24%. However, these numbers are both a dramatic increase in the amount of home purchases from corporations, as this number is usually about 10 to 15% annually, meaning that large corporations' investment in real estate has pretty much doubled since 2020. And there are some areas where I've seen over 80% of all homes in an area being bought out by large corporations and Wall Street. In Texas, for example, the governor expressed some concerns about institutional home buyers distorting the market, making it challenging for average Texans to purchase a home. Texas saw significant activity from these investors, leading the nation in home purchases by investors in 2021, with 28% of all homes sold that year going to institutional investors. In Tarrant County, Texas, investors accounted for some 52% of all home sales. However, the role of these institutional investors in the housing market has been evolving. The use of technology, including big data and automation, has transformed the single-family rental market, making it easier and more profitable for institutions to manage these properties. And so, now real estate has become a great investment sector for large corporations and the ultra-rich. I mean, you have the likes of Jeff Bezos funding a startup that buys up single-family homes, while also buying up land in Hawaii and other parts of the USA for himself. Tencent and Alibaba are buying up homes and land in China. However, they're having a little bit of a crisis over there right now. But pretty much right now, you can just look up any super large corporation and you'll find that they're buying up land in a bunch of countries all around the world. I mean, yes, sometimes they buy this land and they build a data center or they build a campus or a headquarters. But other times, nothing really happens with this land, as far as we know. But the messed up thing about all of this is that the middle class people invest in the stock market in hopes of developing a modest nest egg that they can buy a house or land with. However, that money is now going to large corporations who sometimes use that money to buy up residential properties or land and therefore drive up the cost of those things for that same middle class person who invested in the large company, making it very unlikely that they'll actually ever buy a home. Now, saying all of that, Wall Street and investment firms are not necessarily the biggest driving factor for the price of real estate. I just find it a little bit ironic that the middle class is kind of squeezed into a tool of their own demise. But this actually brings up a much broader question. You see, real estate was the main tool for middle class people to build wealth and climb their way into having a fairly high standard of living. And if you were to take away the ability to buy a house because, let's say, they're too expensive, then what happens to the wealth of the middle class? Well, yes, there is still other investment vehicles like investing in the stock market, opening up a side business, and the likes. However, what's happening now is more people are renting with extremely high rents and not able to save in the middle class. Or you have middle class people that are essentially house poor and have had to take on a ton of debt just to buy a house. So let me reiterate, the main investment vehicle for the middle class is being eroded, meaning that it's going to be tougher and tougher for the middle class to build wealth going into the future. And so here is the question, and this is something that has been on my mind for many, many years. And this might sound a little bit controversial to you guys. And that is the concept of a middle class an outlier of history? The ancient Egyptians and Sumerians of about 4000 BC to a few hundred BC largely were divided into a few people in the ruling class like kings, pharaohs, nobles, and religious leaders, while the vast majority of the population was in the lower class and were either slaves or commoners like farmers. Outside of a few occupations like soldier, merchant, or scribe, the middle class did not exist. Classical ancient Greece around the 8th century BC started to show the beginning of a middle class. This period introduced an early form of democracy. They had decent social mobility for the first time, where average people could rise through the ranks of society, and it's safe to say a middle class did exist in this time, even though it was much smaller of a portion of the population than it is today. During the late Roman Empire, it is fair to argue that there was a middle class, although it did not have nearly the same political power, rights, or economic power that the middle class has today. And then, almost the entirety of medieval Europe and the Ming Dynasty had no middle class at all. and the vast majority of people were peasants or serfs. They did not own any land, they did not have any wealth, and did not have any political power. The Renaissance eventually reintroduced the concept of a middle class to Europe, but it was once again a very small portion of the population. It wasn't until the early to mid 1900s that what we consider to be a true middle class really started developing. And that was because of things like the latter parts of the Industrial Revolution, lots of labor movements, civil rights movements, and, well, multiple world wars that changed the workforce and the demographics of the world. However, just as a counterpoint, there were some city-states, specifically in Italy, like Venice or Florence, that did have a somewhat significant middle class, but this was such a small portion of the world that it's not a good example of what was really going on during the times. So let's think about it. Pretty much through all of human history up until the 1900s, the middle class either had no power, no wealth, or no people. Meaning that what we deem as a middle class might actually be an outlier of history. And even when some semblance of a middle class has popped up throughout history, it usually fades away, sometimes for hundreds or even thousands of years. And right now, there are many who already believe that the middle class is almost entirely eroded. As right now, there are 14 people publicly who are worth over $100 billion, and just 5 years ago, it was only Jeff Bezos in this category. And almost each one of those 14 people has more wealth than the GDP of every country outside of the top 50 wealthiest countries in the world. Countries like Hungary, Morocco, Slovakia all have GDPs that are lower than some of the wealth of the richest people on the planet. And that's not even taking into account the companies that those people own. So actually, here's an interesting tidbit that I will ask you guys. What percentage of the American economy comes from the S&P 500 today? And if you don't know what the S&P 500 is, it is essentially an index of the largest corporations in America. And just for reference, the percentage of the American economy that came from the S&P 500 in the 1950s is estimated to be around 30 to 40%, but around 33% or so is probably a good number. But again, it's tough to get an exact estimate as these numbers weren't tracked back then. Fast forward to the 1990s, and this number was estimated to be around 50% of the American economy. And well, that number today is estimated to be at around 67% of the American economy, meaning that the largest corporations in the world have almost double the power and control over the American economy compared to the 1950s. And their power has grown significantly even in the last 30 years or so. And well, what this means is that slowly but surely, the richest and most powerful people and corporations in the world are gaining more and more control over America and the world. But the real question I want to pose to you is this: is this the actual norm for human history? And are we just reverting to the norm? I mean, John D. Rockefeller and Standard Oil and a litany of other industrialists like Andrew Carnegie and Vanderbilt and JP Morgan all had monopolies or near monopolies in the 1800s. And before that, giant corporations would have disproportionate control over their own countries and others, like the Dutch East India Company, who may have had 25% control over the entire Dutch economy. However, it is worth noting that it was a government-sponsored company. But Canada, for example, was essentially created and invested in because it had a monopolist company in the Hudson Bay Company. There was also the Hanseatic League, which was a European company in the 1400s that got so big that it waged war against other kingdoms. And it was able to set the prices of entire resources in Northern Europe to whatever it wanted. So I can't help but think that maybe the early 1900s and 2000s was just a blip on the timeline of history for having a larger and more powerful middle class and a smaller amount of ruling class people and powerful corporations. I mean, today there's 24 companies that have a high enough total revenue, not wealth, revenue, that they would be in the top 50 countries in the world in GDP. And companies like Amazon, Apple, Walmart, Sinopec, and others arguably have as much or more economic power as entire large populous countries like Egypt, the Philippines, or Iran. What I'm trying to say is that the middle class's erosion of power may not be a strange occurrence. In fact, we might be heading towards a return to the actual norm of human history, a time when everyone works for a company store and does not own anything. The ruling elite get to decide what's best for the average person, and no one else really has any say. Now, saying that, there is still time to change this trajectory. The middle class is currently still here, and still has power relative to most of human history. Maybe some governmental reforms have to take place, whether it's breaking up companies or in the future some sort of universal basic income or a better tax system, who knows. Maybe it's giving more rights to average workers and small to medium-sized business owners in order to promote competition. Maybe it's doing away with large companies' ability to either steal products or slap pointless lawsuits onto smaller business competitors. Maybe it's preventing corporations and the ultra-rich from buying up the main pathway to wealth for the middle class, which is real estate. I don't know, but there's still time to turn this ship around, and maybe, just maybe, we will head to a brighter future of freedom, prosperity, and wealth for the middle class. But for now, make sure to click on my documentaries playlist if you want to see more videos like this that I have already made. But for now, thanks for watching, and I'll see you in my next video. It's good to be back.